Join your host, Maddie Roche, as she brings you into a community of fee-only financial advisors who are successfully building profitable businesses that serve the next generation of clients. Learn from innovative advisors whose unique stories will inspire you to dream big and take action on your goals. Are you ready to live your best life and help your clients live theirs? Then you're in the right place.
Hello, and welcome to this episode of XYPN Radio. I'm Maddie Roche, your host. I'm honored to have XYPN members Sean Gillespie and Paul Allen, founders of Redeployment Wealth Strategies, a fee-only firm in Virginia Beach, Virginia, on the show today. Both Sean and Paul served in the Navy for over 20 years and have chosen financial planning as an encore career. After meeting in a Facebook group just about 3 years ago, Sean and Paul teamed up to rebrand Paul's RIA into their own and began to serve their people, some 50 former and active military members. Today, Paul and Sean talk about how the monthly retainer model versus the traditional choice to bill on AUM has insulated their business from the impact of the coronavirus pandemic. They discuss how their choice in niche, military personnel, has also provided a protective barrier against uncertain times. Most of their clients are enrolled in what Paul and Sean describe as a great retirement package and have not had serious concerns about the recent market volatility. In fact, Paul and Sean onboarded 12 clients last quarter, and each client plans to remain engaged in the services. Paul and Sean cite being active and willing to share in a niche-specific Facebook group as one of the best places to find good leads and to provide meaningful value to the people they relate to and identify with. Paul encourages other planners to lean into a community right now, as he's found huge value in his own community of military-focused advisors. If you're interested in how to build a business that protects you, your business, and your clients during uncertain times, then this show is for you. Avocado toast, selfies, a mountain of student loan debt. Gen Y is anything but traditional, and with over 75 million people, it's a population you don't want to ignore. Learn more about how to serve this unique population in our guide called Attract and Profitably Serve Millennial Clients in Your RIA. Discover 3 key ways to tap into the millennial market and 6 things that they want from their financial advisor. Visit xyplanningnetwork.com/millennials for your free copy. You can find any of the resources we mentioned during the episode at xyplanningnetwork.com/252. Also, be sure to go to xyplanningnetwork.com/VIP to join our private group just for XYPN radio listeners. It's the community of advisors we've all been looking for that's there to provide support when we need it the most. Best of all, it's free. I encourage you to check it out. Again, that's xyplanningnetwork.com/VIP. Without further ado, here's my interview with Sean and Paul. Hey, Sean and Paul, welcome to XYPN Radio. How are you today?
Doing great.
Thanks
for having us.
Oh, I've been so looking forward to this. Sean, go ahead and introduce yourself, your firm, your partner, Paul, to the listeners, and we'll just dive right into all the good stuff that we're going to talk about today.
Yeah, so for those of you who are looking on the web and looking at headshots, Paul's the good-looking one. We're a 2-partner firm in Virginia Beach, Virginia. We're located right underneath the flight pattern of Oceana Naval Air Station, the largest Navy air station on planet Earth. We're both retired Navy, served, in my case, 20 years in a couple of days. And Paul, I think, what was it, like 23, 24 years?
23 years, 8 months, and 28 days, but who's counting?
Yeah. And so each of us, we were both solo practitioners for a couple of years each before we merged, and we'll talk a little bit more about that later. But right now, we have we serve just a little bit shy of 50 clients, and primarily military.
And tell me a little bit more about that niche specifically. Military, just completely general, or do you have a real focus within that niche?
To be like really, really niche-y inside the niche, so specifically, really our wheelhouse is folks that are getting ready to retire, getting ready to take the uniform off for the last time. And then super, super niche-y, I think what we would call the weird part of the niche is folks that are retiring from a military career and then starting some sort of business.
Fascinating. Can't wait to...
But the target is the military families.
Wonderful. So Sean or Paul, you can answer this one. How did you get into this space?
Well, long ago when I was a young sailor, I was looking for a financial advisor for myself. We had just had our second child, and I was trying to get serious about how to make this steady but modest paycheck go a long way and get all of the things done that we wanted, like having a retirement and putting these children through school and having family vacations, the normal stuff. And the long story short is I didn't really find any financial advisors that could serve me. I found people that were willing to sell me product, but I wasn't looking for that. I was looking for someone that I could just pay to provide me advice, to tell me what I needed to do to make the most out of my resources. And that always stuck with me. I abandoned the concept. We did hire one firm briefly. I started reading quite a bit shortly after we'd hired them. This was back in like 93, 94, and discovered that I'd made a mistake, in my opinion, by buying their products and employing them. So I dismissed them and backed out of their products and managed our own affairs, which is not uncommon in the military, managed our own affairs for decades. But thinking the whole time, it just always sort of stuck with me. Why wasn't I able to find what I was looking for? Why wasn't I able to find an advisor to give me honest, unbiased advice for a reasonable fee? And after getting out of the Navy, I went through several iterations of what I wanted to do next when I had to grow up and be an adult. But what I lighted on was it had never gone away from me that I couldn't, that problem didn't seem solved to me. And so I got into the space to try and provide that type of service, at least to as many people as I could.
That's a wonderful reason to get into this space. Sean, when you left the Navy, what were your plans?
So I was more of an enthusiast rather than just a student while I was on active duty. I didn't get super serious about learning the craft until I was already in it. In my case, we had an advisor that we had engaged for years. And when we were inside of our last tour in the Navy, he asked if I knew what I wanted to be when I grew up yet. And I said, no, not really. And he said, well, I think you've got some aptitude for this.
Wow.
If you wanted to come, work with me, you might not have to grow up. You might be able to just do this instead. And so I ended up working with him for 6 or 7 months and still a dear friend, but I was starting to figure it out, and he figured it out a little faster than I did, that we were not as well matched as partners as we had been as an advisor to client. And so he was the one who chased me up a tree one day and said, you're going to do better at this by yourself than you will with me. So go get busy doing that. If you get down to it, he was kind of firing me, but that was okay. that was okay. It was good for me that he'd done that. And so, I operated as a solo, clearing through an independent BD, so and as a hybrid. So I was, I had basically a brokerage and an advisory license and a life insurance license. Most of what I did, was advisory. Most of what I did was the fee work, but I was not a fee only guy until Paul and I kind of found each other by accident about 3 or so years ago now, more than 2 years ago. And the path that, that led to us partnering up, that was when I became a fee only guy.
Yeah. I'm always impressed with the number of retired military folks that end up at XYPN as members and as business owners. Paul, I'm wondering, what about it and what about that education and experience that is so transferable and appropriate for moving into this space? Because some of you all are just fabulous at what you do, and what a wonderful seamless transition folks could make out of the military into this profession. Is it one that you think you would advise others to consider?
Absolutely, especially if you want to continue to work in the space of serving other military families, because the rise of the subscription model has made it possible to serve military families in a way that it has not been in the past. So, the model back when I was looking, and prior to that, probably I've seen the Kitsis Roadshow on the timeline of how the fees have evolved over time. So back around the time I was looking, it was commission based was the dominant fee model, and then it became among advisors, and then it became sort of transferred over to AUM. Neither of those is particularly good for military family who probably doesn't need the products that are being sold and doesn't have a large amount of assets accumulated anywhere except possibly their retirement plan, which we think they should keep in their retirement plan. It's called the Federal Thrift Savings Plan, and it's quite a good plan. So subsequently, the military community was somewhat snubbed by financial planning and financial advisors for many years. The subscription model, which relies on people having decent and steady incomes, makes it possible for advisors to profitably serve those clients. It opens up a very wide swath of people who were previously sort of overlooked by the financial advising community. And it's a wonderful opportunity right now, we think, to get involved. So if you are military and in transition, one of the things we do, and we'd like to do more of, is mentor and provide some guidance to those people to how to transition more smoothly, perhaps, than we did into this field of work.
Yeah. I love that, being able to give back to the folks that you want to stay in a in a network with, and what an appropriate way to be able to serve them. Sean, you mentioned that you and Paul just 3 years ago teamed up. Talk to me about the timeline and that relationship. How did you guys seem like you've worked together for years? I would have not been surprised if you had told me that you were stationed together 20 years ago. Tell me about how you and Paul met.
Yeah, we didn't know neither of us knew the other one existed while we still wore the uniform.
Wow.
And so, we'd both operated as solos. So Paul established the firm that's here in 2015, established it under a different name and had operated as a solo up until our merger in 2018. So I had retired. I retired in 2012. I got licensed up in 2013 for all of the stuff and operated as that solo hybrid at clearing through Securities America, and by about 2016 or so, I understood I was a square peg in a round hole there, that I was more interested in doing, the comprehensive, the holistic planning. I was starting to understand there was an appetite for that, but any national, any BD with a national footprint, their MO is going to be more around, either sales or gathering assets, gathering AUM, which, to be candid is at least at the beginning of an engagement, that's just a sale of a different sort. In terms of, it's a service, but it's a service that requires, pretty much of an all-in commitment from the client right away. And especially when you start getting into, and I did not have to deal with minimums, but I as I learned the landscape inside the industry, started figuring out over the course of a couple of years, okay, how do I want to do this? And for my first 2 or 3 years, basically spent a lot of time crossing off one thing at a time. It's like, okay, I don't want to do it this way. I don't want to do it this way either. What I figured out over time was, I wanted to plan. I thought that was the value that humans brought to these engagements. That the bots are going to do the math better and faster than I could. And I can geek on some math, but I still need to eat, and I still need to sleep, and I still make mistakes. And the bots don't need to eat or sleep, and they make fewer mistakes. As long as we tee up the question for them properly, they answer those things a lot better than we can. And so, as I figured that out, basically I was looking for a new home around about 2016 or so. Basically, found Paul inside a Facebook page where there were a lot of people talking about personal finance, military folks talking about personal finance issues. And he'd comment on a thing, and I was like, wow, this guy thinks a lot like I do. And I'd comment on a thing, and at some point we figured out not only did we think a lot alike, but we lived within 30 minutes of each other.
No way.
Yeah.
Wow.
And so, when I say we kind of accidented our way into this, that's what the accident looked like. It took, more than a year to take shape, but that's how it took shape.
Yeah.
And basically around 2017, we met, late in 2017, we met face to face for the first time and said, we might ought to think about partnering up. We might do this better together than we're doing it separately. I was the first guy to bring it up, and Paul said, "Yeah, I think you might be right, but tax season starts next month, so we're not going to talk about this until May."
Let's table this. What a good story. What a good story. Paul, you mentioned that you were hoping to be able to mentor people to avoid them having not as smooth of a transition into this as you did. That leaves me questioning, what was your transition in? Were there some rough parts there that you wish you could have ironed out?
Well, I think the first part was me committing to doing it fully, because when I got out of the Navy, I had been an intelligence officer for the Navy, and like 99% of the people who have that job, they go into government service in a civilian capacity. And I was doing that for a while, but I kind of got to a point where I thought, well, I want to try and do something that's more fulfilling. It wasn't bad. It was a great place to work. There were nice people there, et cetera. They were paying me well, great benefits, but I wasn't thrilled to get up and go to work every day. So I tried at first to just work within the command that I was at. And I talked to the executive officer and said, hey, can I do some classes for the people here on finance, personal finance? And
Wow.
He was like, that sounds like a great idea. What's your credentials? And I was like, oh, that's a really great question. I don't have any. So let me go get some. Oh, look at the CFP thing. Seems like it's a really good one. So I started working on that right away. Once I'd passed all the classes and I had the executive certificate from Old Dominion University here locally, they let me have some classes and do it. And the same guy asked me later, he's like, why don't you just start your own business? And I was like, well, because the way I want to charge people will never work. I just want to charge people for a fee to pay me, and nobody will pay me like that because everybody's used to paying on the assets under management model. And I really didn't believe it would work. And then I started reading a blog by Jason Osborne called Bass on Asset Management. And he was doing just a flat fee model and making it work. He's killing it. And I was like, holy cow, this could really work. So then I started to take it a little more seriously. Opened up a shop part-time, opened up a tax business and a financial planning firm at the same time, working it in the hours after and on the weekends. And I did that for 2 tax seasons. But before the end of the second tax season, I knew that I was going to leave my government job before the next tax season for sure, because it was just too many hours and the business was growing and I knew it was going to work. So I had all that going for me. The transition into financial planning for me, the tax business grew very fast. The financial planning business, I treated more like a hobby. I charged very low fees. I was just trying to get a handful of clients so that I could get some experience before I brought in a lot of clients at a higher fee. And that was going okay. And I thought that I might maintain that kind of business model where I wasn't really profitable. Sean pointed out even before we merged that whether we merged or not, that I was actually setting my clients up for failure that way, because if I didn't build a business that somebody else would want to take over someday, that eventually I would have to retire and all of my clients would be left high and dry. And that really resonated with me. I had never thought of it in those terms. I thought I was doing them a great favor by offering this really low price. But in reality, I was setting them up for, as Sean had pointed out, ultimately to be let down by me. So,
Wow.
So that's one of the things we did immediately. Yeah, technically, Sean moved into a business that was existing here, but we changed everything so dramatically that I look at it as a totally new business.
So you kept the same RIA, just rebranded.
Yeah, we changed the name of it. We submitted a new ADV.
Okay.
And have updated that recently as well. Sean just fought that fight for us with the state regulators.
What does that mean, Sean?
What that means is I joined the firm in July of 2018, and when we did our 2019 annual ADV update, I became the compliance officer. And so, I think I view most of the stuff that we've done as overwhelmingly positive. The only regret that I have is that I became the chief compliance officer as part of the onboarding plan. I understood, the merit for it was, every year when it's time to do your ADV update, hey, guess what's spooling up? Tax season. So Paul's basically zip tied to his chair, sitting at his desk up to his eyeballs in tax returns every year. slogging through the ADV update is a relatively minor sacrifice. But yeah, so, kept the same CRD, changed the name, brought the subscription model, into play as our main service model. We do have a couple of different options for clients to choose, but certainly the subscription model is the one that we want people in, partly as a business matter, but also from a standpoint of, we think that we deliver better service, and with the client having the ability to spread the cost out over a year, rather than paying for for example, a 4-hour project all at once at, what is now, you started out charging $150 an hour. We're charging $250 an hour now.
Great.
When we do the hourly work, which is very rare. So some of that was again, was a business matter, was a little bit of a lever, to encourage people into the monthly model. But also understanding, again, and you probably heard this a few times on this podcast, as we started understanding the value of our work, we got less reticent about, charging people for it.
Yeah.
Among our success stories over the last, year is, we had our first prospective client, walk away only because he considered the fee too high.
Yeah.
And so, at some point, listen to a number of success podcasts. Some guy named Kitsis, kind of a weird name.
I've never
wears
heard
blue
of him.
shirts all the time. Yeah. But I mean, one of his guests in his success podcast had mentioned at one point, it's like, if you don't have, about 1 out of every 4 prospective clients walking away because your fees are too high, you're not charging enough. We're not actually looking for a number that high, but to have that number be non-zero finally, toward the end of last year, was an indication to us that, we're starting to find what we think is the sweet spot, to where we're not selling ourselves short, and to the point that Paul started off with, that we are building a firm that has, a fighting chance of outliving us.
I'm so interested you're all very aligned with your experience in the military, and I can see how that is so part of your identity. You really did have a choice to work with anyone across the board when you guys became financial advisors. And I'm wondering, what is it about the type of people that you're serving, or the relationship that you two have that really tells you that you're on the right track with working with who you want to work with?
Well, I'll take that one, because I think I can explain it with a bit of a story that happened. I think it was about 6 months ago or so. We were sitting in the office, and we don't take walk-in appointments, but someone walked into the office, and I heard him talking to Sean, and I thought, well, that was kind of unusual, and I could hear his voice, and I thought he sounded a little lost maybe, but he was saying something about having a tax problem. So that's my niche. So I came out and took him back into my office and said, hey, what can I help you with? He's an older gentleman, probably in his 70s or so. And he said, he'd found us on the internet because of the military connection. And he was very interested in using us because he thought we'd understand because of our military background. And he said he had a problem with the IRS, and he didn't understand why the IRS was harassing him. We call it harassment, because he had sent him all this information, and he showed me this folder that he had. It was about 2 inches thick of information. I said, well, let me look at that. Well, yeah, I'm gonna call him Jimmy. I said, Jimmy, let me see that. And I opened it, and it was his medical record from the VA. And I said, well, Jimmy, this is your medical record. Is this what you sent to the IRS? And he said, yeah. And I said, do you mind if I look through this? And he said, no, go ahead. And in there, I found that he had a diagnosis for dementia, which started to make a lot of sense. So I said, hey, Jimmy, are you married? Do you have children? And he very proudly told me about his family, and that he had a son that lived out of the area but was coming back to visit soon. And I said, well, I'd really like to meet your son. When can we all come? Can you guys come back together? So I'd love to talk to all of you together, because I didn't know my boundaries, with dealing with someone with dementia, what my legal boundaries were, but I wanted to get his family involved. Anyway, so we kind of wrapped it up there, and I was walking Jimmy out, and Sean came out of his office, and he kind of gave me the, what's up, shoulder shrug look. And I said, well, that's Jimmy. And Jimmy was a Marine reconnaissance veteran from Vietnam, and we're going to take care of him. And Sean looked at me for about 1 American second and said, that's why I love you, and turned around and walked back into his office. And that is why Sean and I work so well together, because we don't have to ask each other permission about who we're going to take care of or why. We just know. We just know who we're supposed to serve and where we can add value and how.
Wow. That brings a tear to my eye. It gives me goosebumps. What a wonderful story and what a good partnership that both of you have established. Paul, I'm interested, before you rebranded it Redeployment Wealth Strategies and before Sean was on, what was your service model and what had you built up until that point? It sounds like you're kind of the tax guru of the two of you, but I'm wondering, how did the service model change from when you started to now?
Well, so I was trying to offer as close to a flat fee as I could, but for the audience that we want to serve, which is to be able to serve sort of mid-grade E5, E6 pay grade in the military, we wanted our service to be affordable at that level, and that's a hard marker for both of us. In order to do that, a fixed model at that rate, we couldn't survive. So we have to have some kind of graduated rate where people who can afford to pay more will pay more, so that our average is high enough to keep us in business. So what I had was sort of a stepped model. I think I had 6 different fee levels, probably ranging from somewhere around $50 a month to $500 a month or something like that. And I picked up a handful of clients. I experimented with project work as well. I'm not a big fan of project work because I find that if somebody, can take a $400 project, they will, no matter what they actually want or need, they will take that, and then you're kind of constantly playing defense and explaining to the client, well, that's outside the scope of what we agreed to work on. And I find that uncomfortable. I don't like to do that. I think it's just easier to only take people in for comprehensive financial planning, and then I don't have to ever tell them, no, I can't answer that question or I can't work on that for you because it's outside the scope of our engagement. But I picked up around, I want to say 8 or 9 clients. Now, I might have been able to do more. One of the reasons I was interested in finding a partner or somebody to work with was because through the tax business, which grew much faster than I expected and faster than the financial planning side of the business, I had, a lot of people sit across the desk from me at tax time saying, hey, Paul, do you do financial planning too? I might be interested in that. Now, how hot of a prospect is that? They know me by first name. They're sitting in my office, and I felt unable to close the deal because I just didn't know if I would have enough time to work with them or not. So that was why I essentially wanted to bring in a partner. One of the first things Sean asked me, and I think he was really nervous about this answer when we were talking about merging, was, do you think I'm going to do tax? Is it your plan that I'm going to become a tax guy too? And I said, absolutely not. I will more or less forbid that, right? I mean, if I have that in my power, I think it's a horrible idea. I think we have to have one of us that is never engaged in the tax side of the business so that they're always available to handle financial planning clients and prospects of that caliber. So, yeah. So that's how we operate.
Great. Sean, I'm so interested in hearing from you about how this service model it really works with the people that you're looking to help. I also find it really incredible that this subscription model is a really wonderful way to kind of avoid any downturns in the market. And as we're facing our current reality, I know a lot of folks that bill on AUM are facing not just a decrease in income from themselves, but that their clients are experiencing that as well. It sounds like your clients will be hit by our current reality too, but that they're protected somewhat, and you and your businesses, by the subscription model. So tell us a little bit about that.
Yeah, absolutely. And we knew this out of the gate. It's just that neither Paul nor I had operated in a market like this as a pro before. So, I just wrapped up my 50th lap around the sun last month. This is right now in the middle of the COVID-19 bear market. I'm watching the end of the world for like the 3rd time as an adult now, but never had to do it as a pro before, never had to talk clients off of ledges, but one of the things that Paul and I both understood would be a strength to this model, not just a business strength, but also, we thought would be a strength to the service model as well, was that it's not sensitive to what the market does. Yeah. Our fee does not automatically go up when the market goes up because we are operating on a flat fee, and likewise, our fees don't automatically shrink when the market goes down either. And so, we don't spend a whole lot of time worrying about, whether or not this client is still viable for the business. I mean, that was baked in from day one with every client. So not least, it's been, gratifying in a way that only military people understand. I mean, one of the things that all military folks, I think across all services, but certainly for the parts of the Navy that Paul and I come from, we delight in, watching other people suffering, watching the firms that depend on AUM for all of their revenue, out, aggressively prospecting for new clients, specifically because they just took a 25-30% hit to their annual revenue. And so as a business matter, this is a strength to this model is we're not looking for more things to do just because the market took a dip. We're just digging in and doing the work. And we've seen some strengths from the clients as well. It just, part of, what we bake in when we onboard everybody is, just like we told you when we started working together, we're not going to produce gains for you. That's something that the market does. So, your plan is going to accommodate markets like this.
Yeah.
And so, most of the clients that we've gotten, most of the calls that we've gotten from clients have been to the tune of, hey, I remember talking about this. I haven't touched anything. It's like, okay, good. So let's get to work.
Yeah, I love that. Paul, you and Sean have had a pretty stellar couple years, and in particular, pretty stellar last quarter. I'm wondering, in light of COVID, have you experienced any clients withdraw their choice to work with you in this first quarter? Have you had any discussions about an interest in pausing or anything like that?
There's been a couple of clients who have called with concerns about, are we sure that we have them, correctly allocated? Isn't it time to pull out of the market? Shouldn't we need to run to safety? Those kind of things. Sean has handled those and has handled those masterfully. I've enjoyed, from my office, I can hear him when he is on speakerphone with a client, and it's really been fun for me to listen to him talk them off that ledge very, very calmly, very masterfully, and just remind them, this is the time when you use your discipline. It was easy to have discipline a month ago. Now it's hard to have discipline, but it's the most important time to have discipline. And that word discipline rings pretty innately in military people. They understand what that means. And so that's been a lot of fun for me. On the, this time of year, I am mostly, as Sean said, eyeballs deep in tax stuff. There has been a tremendous amount of new government programs being rolled out in response to trying to provide economic stimulus and safety and shelter for people who are unable to work because of the pandemic, et cetera. That has been very difficult to stay on top of. I've seen quite a few, especially small business owners, which we attract a fair share of because of that's who we market to, that's who we publish content toward, et cetera. So small business owners and real estate investors have been particularly concerned about what can they do, what should they do, which of these new programs is the best one for them to apply for, and things of that nature. And so we're trying to handle those questions on a case-by-case basis and still grind out tax returns. Fortunately, there's been an extension to the deadline to file and pay your taxes this year, at least at the federal level. So it's given us some extra time to get all this done. But yeah, there is a lot more to do right now. And I've noticed that first quarter tends to be the busiest quarter for us. It was last year as far as attracting new clients. We just onboarded 12 this quarter, and last quarter was our best quarter for onboarding new clients as well. So I don't know what it is about quarter one in military families, but it's when they somehow start to get serious. Maybe there's some New Year's resolutions going on or something there. They decided to employ a planner and make a plan. But yeah, I don't think it's going to stay this high all year. If it does, we're going to have to come up with some contingency plans for how we're going to handle that. But it's been rigorous for sure.
Yeah, that's awesome, and congratulations on that growth. It's really truly impressive growth. Sean, I'd love to hear a little bit about what some of the advice is that you're coaching your clients through, maybe the small business owners and some families that maybe have lost an income. You've said you've seen, the world nearly end 3 times, I'm sure more than that, but tell me about that.
Well, I mean, in terms of the end, I say the end of the world. I'm just, looking through the market perspective there. So for me, I was 30 when the dot-com bubble went pop. I was 38 when housing was a toxic asset, and now this with the pandemic, and so we're seeing, through markets, we're seeing again, we're seeing it for the first time as pros, basically what Mark Twain tried to teach us, the century before last, and he said history doesn't repeat itself, but it rhymes. Sure, there's a couple of different characteristics about every bear market around the margins, but in the main, they all look more or less the same. About the same size, about the same amount of hurt before people tap out and before the market finds its bottom and recovers. But every bear market is mortal. In terms of, for our clients, because most of our clientele is military, I mean, so, across our not quite 50 clients, 32 of them, 21 out of 46 client households still on active duty, another 11 retired military. And so, with a very steady source of pension income underneath them. And so that takes a ton of pressure off of portfolios, when you've got that steady income underneath it. And so we haven't seen a whole lot of flight or pain. We've got a couple of clients here or there that we're keeping an eye on, knowing, that folks that are purely inside the private sector, even if it's connected to military, I mean, private sector is still private at some point. And so we do have a handful of clients where we're keeping a little closer eye on that, but we really haven't seen much of the same kind of concern that we're seeing across the broader economy. That was not a business decision. We just, when Paul and I got to work inside this field, we wanted to serve our tribe.
Right.
It just so happens that this is one of the features inside our tribe is having a steadier income than most fields.
Totally. I that makes so much sense. Thanks for explaining that. And Sean, I know that Paul mentioned that the retirement program that the military has set up is a really, really good one. And that played into a choice for you not to bill on AUM. Could you expand on that a little bit?
Sure. Yeah. So specifically, the retirement plan across most of the broad economy is a 401k. In the Department of Defense and federal. So we've got a number, maybe a handful or so of client households that are federal civil service, which is very, very close to our target market. It's a pretty close cousin, both in terms of the use of the federal thrift savings plan, or just TSP for short, and a pension element to it as well. The TSP in particular, if it's a really simple, really easy to navigate fund lineup. I mean, there are 5 different index funds inside the TSP, and a handful of target date funds that are just made up of those other 5. And so the 5, real simply, it's one short-term treasury fund, it's one broad bond market index fund, it's an international fund that is going to incorporate emerging markets later this year, but up until now it's been just developed international markets, and then 2 index funds covering the United States, basically one covering the S&P 500 and then one covering the rest of the Russell 3000. So basically the extended market index. Those 5 funds, we always say hidden fees, all of the hidden fees are always disclosed. It just so happens that inside the federal TSP, there are none of those. Until later in life, there might be some fees, some transaction fees when people actually start taking money out of it. But for most of our lives in the accumulation phase, all that you have is the internal expense ratios across those funds. The internal expense ratios across those funds is 4 basis points, and so this is precisely why we didn't want to be in a default mode of telling our clients, well, if you want to work with us, the first thing you have to do is roll all your money out of this out of this 401k that costs you nothing.
Wow.
And so, when we made the decision to to go ahead and merge our practices into the one firm, that was the thing that we put the most thought and the most work into, was a service model that didn't incentivize us, to make that decision. And so, we settled on flat fee fairly quickly. It is not independent of assets, so basically what we were looking for was a model where we would be charging on the complexity of the planning engagement. And so the first filter that we do run through is through the filter of net worth.
Yep.
But with an understanding, an explicit understanding that is expressed in our fee formula, in our ADV, and it's front and center on our website as well in terms of how we make that determination. So at $150,000 of a modified net worth, so we're not, that first thing that we're doing is we're already not counting the first 100,000 of any kind of retirement asset. So whether it's in TSP or an IRA or whatever else, we really don't start counting that first dollar until we're north of 100,000. Same for the first $100,000 in equity and equity in your primary residence. From there, north of 150,000, that doesn't, industry average I think is a point, a percentage point on the first million in assets. North of 150,000, we're at 75 basis points.
Yeah. North
of a half a million, we're at 50 basis points. Long story short, we looked at that and it's like, is $1 million portfolio more complex to manage than $100,000 portfolio? Yeah, absolutely. Is it 10 times as complex? Absolutely not. Does it take us 10 times as much time? Absolutely not. And so we wanted to build something that reflected that value.
Yeah.
What we figured out over the course of our first year is that not even all $1 million portfolios are created equal. If you have if you have a concentrated position in Apple, for example, in a taxable account, that's going to be a lot more complex to manage than somebody who's in, purely in retirement accounts and index funds all across it. And so, what we developed over the course of our second year working together was, a series of about 10 or 12 questions, basically yes or no questions that we would run through to determine, okay, where is this more complex and where is it less complex, and to reduce that, that modified net worth fee accordingly where we found, simplicity.
Yeah, totally fair. I appreciate that explanation and thoughtfulness with that. Paul, I know that you are the tax guy. Are all of your clients using you for tax preparation, or is this an arm of the business? How do you handle that?
So in case the regulator is listening, our clients are not required to use the tax service that is provided here.
Noted.
Because they made us spell that out in the ADV.
Oh, did they?
They did. It always struck me as a little bit amusing. Yeah, and some do not. So some have come on board and already have a tax person that they've been using for years and they're very happy with them, or we have a couple of people who just need us for financial planning and they have a situation where they actually need a CPA because they have business that has accounting needs that we can't meet here. So it's better to keep that all in one place. But most do. More than half do. And I think that more will transition over and use us in the future.
Sure.
For tax as well. And we charge separately for that, but we give people a price break if they are on their tax return fees if they are an RWS client.
And Paul, where are you finding most of your new clients? Are they finding you online? Are they finding you through referrals?
So it's a mixed bag. We've got Sean is become very adept at finding where the people are that would be most helped by our service and would see the value in it, and in social media rooms, and going in there and using the model of just give away information until somebody notices that you've been helpful an awful lot and wants to strike up a conversation offline. So, 99% of that time is not, anything that's going to bring back money, but 1% of it is, and that's really all we need. And it's grown pretty well. It was pretty funny because we went through a streak where all of the people were coming from social media. And so I would walk by Sean's office and look in and say, "What are you doing? Get back on Facebook." Sort of the opposite of what you'd expect.
Well, you two met on Facebook too, so it's just perfect.
Yeah.
Some come through the tax business, so we get recommendations for the tax business, and then people come to the tax business, and then they see my CFP certificate on the wall, and they start asking questions about that. And the fiduciary hat that I picked up at XYPN Live last summer, I keep that out on display too, so that they're conversation starters. A lot of people, once you get them talking about their money through taxes, it's a natural sort of segue to start saying, well, we can provide these other services if you're interested. Hey, let me introduce you to my friend Sean, and he can take you, because I have 2 people in my waiting room waiting. Back when we had people in the waiting room. Right now we're doing everything virtually because of the pandemic. We get some through the NAFA site. We get some leads through the XYPN site. We get some leads through referrals as well. So we have a couple of really strong evangelists that have been sending quite a few people our way, and we at least get to have the conversation with them. To start the conversation with them that way.
Sean, how has the service changed since the pandemic? Are you not seeing clients in person? Or are most of your clients used to seeing you in person?
Most of our clients are already used to not seeing us in person.
Okay.
Most of our clients, so out of the 46 different households that we serve, 28 of them are not in Virginia Beach.
Wow. Okay.
So, one of the things that we knew right out of the gate was if we were going to serve our tribe, and it's a tribe that's all over planet Earth, that we needed to be able to reach people all over planet Earth. And so, the virtual aspect of the service, that was part and parcel to the model, right out of the gate. Everything that we've done for the planning business has been cloud-based and has been something that we could do just as easily through, Zoom or GoToMeeting or whatever. Right now we use Microsoft Teams, but we've had the ability to meet virtually with people from day one. And so, the pandemic hasn't really, there's only been the slightest of interruptions for the tax business, and it's been no change at all for the planning and investment business.
Great. I'm wondering, and I just love, your work has now helped, 46 plus people and their families better plan for their futures. How do you think other planners and just folks in general can make financial planning more available to underserved communities like military folks? Do you have any tips on that?
Well, for us, it's been a lot of, so very much like Paul described. We've found a lot of our clients just by evangelizing inside, a couple of different groups online, and the give away 99% of our time model also came from a guy in a blue shirt.
I think I knew that one.
I didn't think that this was probably the first time that you'd heard that. And so, again, we bake that in and typically, inside a Facebook page, we're just talking to people, and questions come up, we give answers, and when we find people, when we talk about finding business that way, that's people that are coming to us at that point saying, hey, I would like to hire somebody. I've noticed that, you've been very helpful inside this group. Are you still taking new clients? So, and we're not, 46, leaning into 50 here real soon. 46 families that we serve is a lot, but it's not enough to where we're telling people no yet.
Right.
And to the point of, the quarter that we just had was a good year for some firms in terms of bringing new clients aboard. On January 1st, we thought we might need to hire somebody before the end of the year. Before March was over, we knew that we needed help yesterday.
Oh, interesting.
And so, we're down a path right now with, who we think is probably probably our strongest candidate to come aboard for just 10 or 15 hours a week.
Oh, wow. Great.
For starters, but somebody who is looking for some part-time work while she finishes her CFP studies at K-State, and she's a member of the tribe. She's the spouse of a retired Marine, and so she knows the life, and so and she's comfortable working virtually. So I mean, we're here in Virginia Beach. She's just outside the Cherry Point Marine Corps Air Station in North Carolina. And so, we think our first hire is probably going to be a virtual, basically a virtual paraplanner.
Great. Congratulations on deciding on making a hire. That's a big choice. Paul, you and I first met at XYPN Live, and I'm wondering, how have you leveraged a community over these years? And what role does a community play, especially when you have such a willing and able, wonderful partner like Sean to bounce ideas off of? You're so involved otherwise. I'm wondering, what does it give you?
Where to start with that? So, yeah, we sort of met at XYPN Live. I mean, you were kind of walking down the aisle taking selfies, and I ended up in one of them. But that was a lot of fun, by the way. I was unsure before I went to XYPN Live if it was going to be worth my time to go, and I made my reservations to go to the next one the day after I got back from this one. I found it very, very valuable. So if anybody else is wondering, there's a lot of great stuff that goes on there. One of the things that happened there that I think is going to bear the most fruit for me for the rest of my career is I met some other people who specialize in this field. I didn't even know they existed, frankly, that there were other people out there who were CFPs or CFP candidates who were working in the space of serving military families. Ran into quite a few of them out there. We got a group together thanks to the work of some of the, shall I say, younger crowd who know how to work that conference app a little better than I did, so that he could reach out and grab people and say, hey, we're going to have this meeting. And we ended up having lunch together. There were 12 or 14 of us. We've stayed in touch since then. We have weekly meetings via Zoom, had some of them facilitated by XYPN, had some guest speakers come and give a little bit of training on some topics that are of interest to all of us. And we've decided to launch something that we're calling the Military Financial Advisors Association. And the website is just about to launch. So by the time this airs, hopefully it will be launched.
Okay.
Sean and I were looking at the prototype earlier today, and we're pretty happy with it. So I think we're going to be ready for prime time here by the end of the month. So it'll be militaryfinancialadvisors.org. That's advisors with an O. If we could get that in the show notes, that'd be wonderful.
You got it.
And it's a place where people who want a financial planner who is familiar with military issues can come and find one of us. Or if you are military and you're thinking about making a transition to becoming a financial planner, you can get some mentoring from one of us. Or if you just have some questions, we plan to have some content that can answer sort of simple, common questions, maybe, sort of FAQs, but, the content will come over time. But that's our long range thinking. Currently, one of the requirements for membership, by the way, is membership at XYPN. So we defaulted to letting you guys screen all our applicants for some of the basics that we want.
Good. We can do that for you.
Good. Maybe in the future we will grow beyond that. But for now, we're more than happy to concentrate on what's most important, which is trying to get the thing up and running and making sure that we've got the right people doing it. And we think XYPN does a great job of attracting those people. So we're very comfortable letting you guys run that part of the show for us for now.
Well, kudos for making the initiative to get to know other folks. You don't have to do that as part of membership.
That's true. I would go through and list these people by name, but I would do them a disservice. But I want to mention a couple of them. One is Scott Vance, who has been coordinating all of the monthly meetings that we've had so far. And another is Dan Kopp, who couldn't be a nicer guy and a great American if you ever get a chance to meet and talk to him. It was at the XYPN Mixer. To go back and tell the whole story, Sean went to FinCon, which was the week before XYPN Live. I went to XYPN Live. So we kind of split up and went to two separate conferences. Dan Kopp went to both. So he came up to me at the XYPN mixer and went, "You're Paul Allen. You're Sean Gillespie's partner." I'm like, "Yeah, do I know you?
Who are you?
Yeah. He's like, "I met Sean at FinCon." And of course we hit it off right away because he's just a tremendous individual. And he's been really instrumental in getting this Military Financial Advisors Association off the ground. So let me give him a shout out too.
Awesome. And I'm happy to help you guys, anything you need to set that up. If you can believe it, we're rounding out our hour together. Sean, I'm interested in your advice to maybe someone who was in your position 20 years ago, thinking about or less than getting out of the military and starting a new career. What questions would you ask yourself? What things would you have folks consider before they jump into starting their own financial planning firm?
Well, so as we've covered over the last hour, both Paul and I got into this by just jumping in.
Yeah.
If I had to do this over again, and just like Paul didn't, I didn't either know that there was such a thing as a fee only model. I only knew what I'd been exposed to as a consumer, and in particular, if I had this to do over again, I would have found a way to do this someplace where I would have spent my first couple of years learning the craft. And knocking out the academic stuff before I started taking on any kind of real heavy client-facing responsibilities, and certainly before I took on business development responsibility. I jumped in the way a lot of people jump into the industry, which is to take my Series 7, my Series 66, and then immediately go start finding clients. And I think that model is specifically why the larger, the broader industry has about an 80% attrition rate inside the first 3 years.
Mm-hmm.
And certainly we military folks, we tend to be a little bit more analytical than average.
Mm-hmm.
And so, if I had this to do over again, I would have spent a little bit more time looking for a firm where I could learn how to do the work first. Because for as much as we say, and we all say this, I mean, most of the people in the fee only space, I think, have this outlook is we don't think of ourselves as salespeople. But if you are going to be in this as a business, you're going to have to learn to sell the service. Because if you don't learn that, you're going to have a very, very expensive hobby. And that's a nice, clever way to brief it. But I mean, like, no kidding, if you want to do this and make sure that your marriage stays strong and healthy, let's talk about how we do that, where you inch in, and you might have a couple of exit ramps along the way rather than, just jumping into the deep end of the pool right away and learning to swim, by just not sinking.
Mm-hmm.
Find some ways where you can get into this and not just survive, but thrive at it right away before you start taking on the responsibilities of finding clients, before you start taking responsibility for actually running a firm.
Yeah.
If I could do it over again, I would do it that way. Now that I'm here, no regrets, but that doesn't mean I wouldn't do it different.
Good advice. Paul, how about you?
Well, Sean and I had the luxury of the long runway. So we both have wives with good productive careers, and we both had military pensions. So, we could make our household budgets work without bringing any money home from this business. And that provides you with a tremendous amount of flexibility to get it right. So I wasn't trying to bring in a lot of clients in the first year because I needed it to make my mortgage payment. I was intentionally going to bring in a fixed number of clients, a half dozen or so, and then work with them and learn what I needed to learn about how to run the business, how to build my processes. I don't have any regrets for the fact that I just kind of jumped in because I had that long runway.
Mm-hmm.
So I guess my advice would be to build yourself a long runway, either build up a big nest egg or marry well, like Sean and I did, or do a military career and have your military pension ready for you. And if you're military and you're thinking about jumping into this business, get your education done while you're on active duty and start knocking out some of those credentials, because it does not get easier. And to some degree, it's a necessary evil, but there's also a lot of good things that you learn along the way. So when I first started taking CFP courses, I thought I was pretty smart about financial planning. Well, I was really smart about my financial plan, but my facts of circumstances are not identical to everybody else's. And
Right.
there are a lot of things that people deal with that I never dealt with, that I had to learn about from books.
Yep.
And so I highly recommend going that route and getting your education done.
Oh, well, listeners, I hope you've enjoyed this interview as much as I have. I've learned so much from you and from Sean and Paul. Thank you both so much for joining me this afternoon. Congratulations on building such a productive and wonderful firm, and for serving the folks that you do, and of course, for being wonderful XYPN members. I hope you all have a great rest of your day.
Thank you.
Thanks, Maddie.
Avocado toast, selfies, a mountain of student loan debt. Gen Y is anything but traditional, and with over 75 million people, it's a population you don't want to ignore. Learn more about how to serve this unique population in our guide called Attract and Profitably Serve Millennial Clients in Your RIA. Discover 3 key ways to tap into the millennial market and 6 things that they want from their financial advisor. Visit xyplanningnetwork.com/millennials for your free copy. Be sure to join our VIP community at xyplanningnetwork.com/VIP to hang out with other XYPN radio listeners, ask questions for future mailbag episodes with Alan and Kitsis, and finally to find a community of like-minded financial advisors. Thank you so much for joining me today. We'll see you next time.
You are not alone and you are not crazy. It's scary starting, building, and growing your own financial planning firm, and that's why we put together a free private community just for you, the Cutting Edge Financial Planner. Go to xyplanningnetwork.com/VIP or text XYPN Radio to 33344 and join a network of thousands ready to change the lives of Gen X and Gen Y clients.